Unlock your business's financial future with a powerful Excel income statement projection. Let's build your financial forecast step by step. First, open a new Excel spreadsheet and set up your income statement by creating clear headings: revenue, cost of goods sold, gross profit, operating expenses, and net income. We'll start with revenue. This is your projected sales. Begin by entering your historical sales data for a few months. Then forecast future revenue based on market trends, planned promotions, or new product launches. You might use formulas to automatically increase this figure month over month. Next, cost of goods sold, or COGS. This is the direct cost of producing your goods or services. Often, COGS is a percentage of revenue, so if you project your revenue to increase, your COGS will likely increase proportionally. Link this to your revenue figure to automate calculations. Now, gross profit. This is a crucial metric, calculated by simply subtracting your cost of goods sold from your revenue. Enter a formula to handle this calculation automatically. Moving on to operating expenses. Categorize all your business's regular costs: rent, salaries, marketing, utilities, and so on. Input your best estimates for each category for the future periods you're forecasting. Summing these up will give you your total operating expenses. Again, use an Excel formula to do this efficiently. Finally, net income. This is your profitability. It's calculated by subtracting your total operating expenses from your gross profit. This formula will show you your projected profit for each period. By creating this projected income statement, you'll gain a clear roadmap of your business's financial health, empowering you to make smarter decisions and achieve your goals. #Excel Finance #Financial Forecasting.